Viva, market update, market update. We're gonna pick up where we left last week, 2 weeks ago. We have drawn a trend line to see where the price of BTC will actually go. All right, let's start with fear and greed index. So right now, as you can see, extreme fear. We have 20. Last month was 22, and so far we're still in the 20s. And as everybody's looking for the Feds to pivot, so we just keep doing our trades, our research, and give you the best of the best. Let's do it. Let's do it. All right. So we are the chart for the daily time frame for BTC. Yeah, I want to show you guys something here. Let's take a look first on the trend line. Trend line we drawn on was 2 weeks ago. Yeah. As you can see, the trend line we actually in a state of a consolidation right now. So which is outside, or we call it yeah, outside of the trend line, which is I wouldn't say bullish. I think not even I wouldn't say bullish or bearish. Bearish is still bearish because we are at the bear market, right? But we'll see. For me, BTC probably to come and retest the 25 to 30. It needs to be above 25. I mean, if to come and retest 25, we needs to be above 20. If he spends a couple of days above 20, so they will definitely come to 25. And, I don't see enough incentive for the price to move up to those regions between 25 and 30. So I'm still very bearish in terms of the price action for BTC. All right, so we've seen the trend line, we've seen what the price is. If you want me to actually make it bigger so you can see, we have some beautiful candles here. We made something I want to show you here that we might go back to 2021. We'll see. But I have something here that I have I've seen that it was forming during this 4 days. Is that you see right over here in a second, right here, BTC has formed a double bottom, and then we have a beautiful engulfing candle right there. So that's what you guys see in that pump to 19,800. That's what it is. We had a beautiful, well formed double bottom. Would it hold? How far would it go? Well, my prediction is to come and retest the 2400s. Um, right here, as you can see, I have drawn a resistance and support line right here, but I don't think Bitcoin has right now. I don't see anything changing to BTC to pass the 20. We'll label that. All right, and we can label the support as well. If you wonder what that means, MR means measure resistance, and D for daily time frame. The same thing for the support, which is measure support, and D for daily time frame. So, so you can see we have a beautiful double bottom right here. So, um, which is, you know, we might get to 20, but I don't think BTC have enough steam to go past 20 right now. Right now, things change. No one knows what the market will look tomorrow or deep at the end of the day. As uh as I film as I film this video. All right, so let's take a look at some of the real potato in the salad, as I call it. So not a lot of people are talking about this indicator here. that I'm gonna start sharing with you guys. It's called CDS. Uh, there's a guy that actually I gotta give him props. He made a video. It was one of my uh YouTuber um that I follow a lot. He put up great content with Smart Moss. So let's take a look something that I want you to actually follow me on this because I'm gonna give you a definition of what I'm about to tell you. I'm gonna give you some indicator to show you that what really what's going on, why it's happening, what might be happening from now and on. So first thing we need to know is what a credit risk is. A credit risk is a risk of default on a debt. Like if you have a debt, you can't pay it. So that's called credit risk in simple words. But let's go on again. Um, it's a risk of default on a debt that may arise from a borrower failing to make required payments. That's it. Not going to go any further than that. As you know, credit risk, as I told you, is a risk of default on a debt that may arise from a borrower failing to make required payments. So in simple words, is if you if you lend money to someone, you made a when you landed you decide you both of you decided that $50 monthly payment will be the required for him to pay back the amount of money that you lended to him. So when he doesn't pay it, that what we call a credit risk, uh the default that comes with it. Don't get too confused. It will get simple. All right, let's go now. I want you guys to actually look at this default risk. Remember, we looked at a risk, credit risk, and as you know, credit risk is a risk of default now on a debt when you can't pay a debt, right? So now we're looking at default risk. What is a default risk? The default risk is the chance that the borrower will stop making monthly payments on their loan as outlined in their lending agreement. Between that agreement that you did with the borrower, the people that you lend the money. So there is a risk that's called the default risk, right? When you stop making those payments monthly. So these possibilities also sometimes refers to as credit risk. Remember, default risk and credit risk is almost the same thing. It is something every lender or rating agency has to consider when evaluating an individual or business. Remember, before you risk it, so you got to know how high of a risk is the person or the individual or the business, whatever that you're going to lend the money. Right? So remember, credit risk and default risk all will come to this. What I want to introduce to you guys what we call credit default swap. This is what controls the most of the government um, money market. So just remember this credit default swaps, which is CDS. We actually gonna read the definition, which uh, based on the Federal Reserve of out of Washington D.C. It's not my words. So all right, so credit default swap CDS, which that's what he means, and that. All right, by far the most common type of credit derivative. What is a derivative? Derivative market is the biggest, probably a value is value of quadrillion of dollars, which is pretty much a paper contract. Uh, the buyer and the lender they agree upon. Uh, there's really not nothing tangible in derivative. Derivative is more like a Ponzi scheme, a legal Ponzi scheme, which is when something just it's just let's not go there, but that's what it is. That's what it is. In simple words, is a legal Ponzi scheme. That's what it is. Because there's nothing there. You just um, and it's just an agreement based on between the lenders without a product in between. Okay, so they are financial instrument that allows the transfer of credit risk among market participants. So between banks, when they have a bunch of loans, a bunch of mortgage, they create what they call the CDS, which is CDS is more like an insurance. So and they keep swapping, they keep uh, moving in between them. So if a bank has a CDS with a bunch of mortgage, they'll probably sell it to a different bank because the payments when they come instead of paying that the bank that had it before, now it will be paying to the person that to the bank that actually acquired. So they keep doing that. That's what it's called the CDS, which is credit default swaps, but it keeps changing the hands, right? So in its most basic form, a CDS is a contract where a protection buyer agreed to make a periodic payments to CDS spread or premium over a predetermined numbers of years. Okay, so for those who don't know what a spread is, for my forex traders, stock traders, they that's piece of cake. Spread in simple words, not to go too far, is a broker fee. For those that want to trade stocks in forex, um, that's one thing you have to know. You need to use a broker, and when you use a broker, there's what we call spread, which is a fee, which is the you know, which is the how they uh, especially when a broker says there's no commission, they're not taking no commission. So the spread is still that's the price they're gonna sell you the for forex for forex is that fee between the currencies that they'll sell it to you and they'll buy it. So that difference is what we call the spread. But if you're interested in know a sim, if you're interested in knowing the spread, we can make a video suggesting how do you can simplify what a spread is. All right, so now this is the data I want to show you guys. This is very very important. So we're gonna take a look and see why the UK has fallen and who's next and how to kind of protect yourself if you if you even if you an investor, right? So if you invest in some of these countries and then if you wanted to profit for what's coming. So because in every fall there's always something there that you can hang on to it and that is gonna get you to the top. So um two things here that I want you guys to see. So here it says name. If you look here on the left side, right top says name, and then 5Y CDS. As you know, 5 years. This is the data. And 5 year CDS, as you know, is credit default swaps. Spread, something that I was explaining to you, is a fee, right? But don't look at fee. But I want you focus is the name, and then right here what he says low, average, and now. The orange, which is average, and blue, which is now. Uh, for that, the historical range that we're looking at is three months. It's not a whole year. So if I were to do a year, it would have looked different. But what I want you to see is just 3 months. What's going on in these countries? So United States, as you can see, the average is 20. But look at this right now, blue dot. It says it's almost at a brink of collapse. It's almost there. So we look at Brazil, same thing. Brazil, the blue dot. We're looking at the blue dot. It's somewhere at the peak as well. Colombia, if you look at right now, prices, inflation is very extremely high and it's just going insane. Mexico is as well. You know, now we look at United Kingdom, see UK. Look at that. That, guys, this is why you see what happened 2 weeks ago in the UK. The currency just collapsed. The economy just went berserk. So this is it. Then they're like at a critical level, critical, guys. This is very so. This is uh what you see when countries it get to this level at the peak at the very last. It's a sign that something's going to happen in their economy. So this is what happened in UK. So the sign was there. No one people that actually know where to look for the info. If they would have if they would have prepared themselves, they could have just short a lot of stuff and just make a ton of money and short it. Um, so looking back to United States, um, we might get another downfall unless I see the feds coming in and just print a lot of money, incentivize people to start spending. This is gonna keep going to the extreme. If it gets to extreme, guys, we having probably another 40 to 50% down the stock market and crypto. You know what's gonna happen. Crypto is gonna suffer a lot, guys. Um, so going down a little bit more, France, Germany. So don't be surprised. Germany will be the next one falling. Italy, Spain. I'm actually very surprised that Spain is at this very peak. Portugal, we all know Portugal is very critical. So careful for my comrades that actually invest in Portugal. Portugal is in a very risky position right now, so be careful there. Uh, Sweden, Netherlands, Greece, they all Europeans is actually in a bad shape right now. So if you can see the US dollar is actually stronger than Euro. So we take a look at the Asian Pacific. See Japan. I'm actually surprised that Japan is not at a critical level. They've been maintaining that negative rating for as long as we know. Australia, 2 weeks ago, as UK was falling, Australia was falling as well. Here's the sign right there was at the peak. New Zealand probably will be next. South Korea will be next. China. China is actually we've seen a lot of signs right now that China is actually falling as well. So that's just some of the countries. So not all here, but some of the most important economies are here. So if you want to profit with it, so this is one of the biggest. For me, I think this is one of the biggest indicator here because we're talking about the whole country, how they managing their expenses. This is not just the one sector of the economy. This is the whole country. This includes government, it includes everything, and we know who's coming next, right? If you just look at that. All right, so going down, there's an article here I want to share with you guys, which is a 2020 Global Severe Debt Monitor, which goes along with this image that I was showing to you guys. Um, we're gonna take a look a map. I'm gonna show you this map. They did it. It shows the country that are in a very high risk of collapsing right now because of debt. As you can see, they haven't put America and European. They we have South America, we have Africa, we have a Asia Pacific, include Russia and India and China as well. So you can see the red. Let's just go here at the symbol so you know what I'm talking about. See, that situation. Red is very critical. Orange is critical. A light orange or brown, you could call it slightly critical. Light gray, not critical. Gray, no data available. So, and then that trend, the red arrow pointed up, deterioration, we call yellow, no significant changing. Down. green improvement. So let's go. Argentina, red going up. If you look, most of the South America, the big economy, they just and then brink of collapse. Like it's everywhere. It's just wow. It's interesting. Guyana is actually the only one in South America that has a green. And going back to Africa, you have Mauritania, that's green. You have Chad. You have Saint Tome and Prince. You have Democratic Republic Congo, which is very very interesting. Central African Republic, which was in war at some time. South Sudan, and the rest is just going nowhere. So we take a look at Angola. It's very in a very critical position right now. It's, I don't see a good year or next year, the end of the year. I don't see a great prosperity coming to, to Angola. We're gonna be having a hard time there. 2023, I think is be the worst. Um, Not saying, and we'll stay with that. Okay. It's the other thing I want to share with you guys is just a quick summary here. 39 countries are particularly critically indebted. The G20, which is the biggest economy, measures implemented so far have not enabled any substantial debt relief. Of course, it wouldn't because they're in trouble right now. We see one of the G20 members, which is UK, Australia, they collapse. And right now, Jesus printing a lot of money, incentivize the people to start spending and stop saving. So the massive expansion of multi-layered crisis finance allowed private creditor to exit from debtor country without having to take any loss themselves. Yeah, man, the game is not fair for everybody. Thus, instead of a crisis being swiftly resolved, private claims are being passed onto the public budget. Taxes, guys, taxes. So imagine a country like Angola, which is on the brink of collapse in terms of economic status. Um, what are they going to do? They're going to raise taxes. They're going to get the people to pay for this mess. So you know what that comes with. All right, so that is that. Now I want to share you guys with the world government bonds. I like to kind of come back here because it's great info here. One thing I want to take a look is the latest news. If you click right over here, you will see what countries in what states they actually raising their rates. We can see October 2022, Chile has raised 11.25%, which is a lot. The reason why you see most of these countries here, most all these countries, their economies are small. Mexico has a big economy. What else? So we could say Pac, Bangladesh, Singapore, South Korea as well. But the only reason they're here because the dollar is going so high, is killing every currency around the world. So as you can see, um, all this country, Hong Kong, United States, Sweden, they're all raising rates to combat the inflation because the inflations are on these countries. Yeah, it's not just on this country. Everywhere is so high, so high. It's just very crazy. Um, this is it. This is some of the indicators I actually look for. I haven't shared that before, so I wanted to share with you guys. We in the bear market. So with this type of info, I believe you can position yourself better for uh, for what's coming and what the future might hold for us. And for we'll talk about the crypto market. So don't lose hope. As I told you before, I will keep telling you again. This is the time for you to do the DCA, do your research, we'll start a new series of videos to kind of give you a couple of coins that we looked for. We did a lot of research and we're doing DCA, and hopefully you guys are doing the same thing, because when the bull market comes, not the time for you to stop buying. It's not the time, guys. It's not the time. If you want to do that, be my guest. But I have told you that before, way before. I showed you a couple ways to do it. Let's just go to a CoinGecko. I'm gonna show you something that I've been talking about this coin for as long as I can. People can go to my YouTube channel, and see there's a long video that I dedicated just for this coin, because I believe this is one of the coins that will get to the top 20, which is called Casper Network. There was something that they introduced, and for you, as you can see, the price is just pump. Price just pump. It's still 96.3% discount, but look at this. Within 30 days, um, 4 months ago, when Bitcoin was at 17,000, if we were to buy, if we were to just do your DCA, I wouldn't say that. If you just keep doing your DCA right now, in 30 days, you would, in the bear market, you would get 63%, which is a lot in a bear market. 14 days, 69%, you could sell it and then wait for another wave and buy it back again. But just take a look, 7 days, 13 days, but that's not going to hold, because the bear market, things are very volatile. Today you get into you are 20%, and within 24 hours you're gonna see that 20% evaporate. So very be careful in that. This is one of the example. You want to take a look on my channel. There's a video that I talk about Casper Network. So be smart. This is time to take serious the crypto market and other markets, because you know let's be honest, blockchain is not going anywhere. And not going anywhere. For those that took my course, I'm very passionate. D5. Uh, so you gotta find a category for you to be passionate about it, and then you gotta do your research. Really do your research there, and just try to learn as much as you can. But all right, so don't forget to like the video, and I'll see you in the next video, guys.